Hello and welcome to another webcast from your friends at Accounting Web. I'm Tom Herbert, the business editor for Accounting Web. Thank you very much for tuning in. There may be many of you watching who navigated the tricky waters of the financial crisis in 2008, and some of you in senior roles during the dot-com bubble bursting in the early 2000s. However, the current economic uncertainty, particularly in the UK, created by Brexit, is arguably one of the biggest challenges facing us, the business leaders, in a generation. This webcast is going to uncover some of those challenges and look for how you can prepare your business for these challenges. Joining me to add his expertise to this topic is David Hobson, who is Office of Finance Lead for Oracle. Welcome, David.
Hi, Tom.
So we'll start off with a little bit of housekeeping. First of all, I'd like to thank our sponsors, Oracle, for making this session happen. A few things you need to know, if we can throw to the slides, please. If there are any technical issues, all the sessions will be available on demand afterwards. So if you are having any issues with your internet connection or viewing the content, then you will be able to watch it back afterwards. If you are having problems or have any technical questions, then please email campaigns@accountingweb.co.uk. Now, we will be asking you to post questions, which you can do in the box below this video if you're tuning in on the Accounting Web page. So you can use the chat window either to the side of this video or below it, depending on the browser you're using, and we'll try to answer as many questions as we can. They will be beamed into my trusty iPad that I've got here. If we miss any questions, then we will try our best to answer them as part of a post-event article on Accounting Web. We'll also refer to a few documents, specifically a study from Oracle, which you can access via the link below on the page. You don't need to pause the video to access this. And of course, you'll receive a written write-up of today's session. Let's have a look now at the contents for today, what we're going to be looking at. We're going to be looking at how to prepare for turbulent times, a little bit about Brexit and the effect that it's having, look at sort of cost efficiency and internal processes, so how to drive efficiency and improve your processes. Look also at better performance management, so aiding better financial and performance management. And then adopting a sort of agile, creative mindset, looking at how to stay ahead of change. And if we've got time, we will look at audience questions at the end. I will be addressing them throughout as well. So let's get started, David. I'm going to start off with this statistic that we've got up on the slides here from Oracle. It's an Oracle report, isn't it? It's stepping into the unknown, making better finance decisions around Brexit. So 46% of finance leaders say their forward planning has become more complex and uncertain. Turbulent times globally, really, with economic, political uncertainty. Can you just outline briefly some of the challenges that modern finance leaders are facing at the moment?
Sure. I mean, it's such a broad topic, and clearly there's no crystal ball specifically around Brexit and a lot of the things that have yet to be defined around. I sort of call it more the divesting from Europe rather than the divorce from Europe. But I think the sort of the broad picture, the macro picture. I mean, over however many years, last 25, 30 years, has been huge sort of market fluctuations, changes. You talked about sort of the credit crunch and the financial crisis in 2008, which not only resulted in some new regulation, but also maybe leaner thinking by a lot of companies as to how to sort of survive with constrained credit, and people were thinking about growth. And it seems to me that through that time, up through about mid-2016, we were actually thinking, okay, well, the economy was sort of poised for growth, billions had been pumped in to sort of get things rolling again. And Brexit came along, and whether you were pro or con, And it's interesting to see the stats that 46%. I mean, clearly, even the Bank of England was not necessarily fully prepared for the detailed policies on how we're going to deal with this. So the turbulent times and sort of stepping into the unknown is kind of the theme of and as part of this discussion, we'll talk about some of the areas of consideration. And without knowledge of the detailed policies, we do believe that there's an element of, as Philip Hammond called it, getting match fit. So being better prepared for those events that are upcoming.
Sure. So to coin a US military term here, I mean, we obviously can't know the unknowns, as it were, but how can we better know what the unknowns are, as it were?
Well, I think that, what's become apparent through all the debate and discussion about potential impact of Brexit. I mean, some things have already happened, even from the point of the referendum. I mean, the weaker pound is already affecting organizations on multiple different dimensions. It's kind of works both ways, doesn't it? It's always, depending on your perspective, it can either be good or bad. So, for those companies who have a lot of foreign earned income, which I understand is 70% of foreign earned income for the FTSE 100, so they've actually had a big increase in revenue. Whereas the companies that export, their exports are cheaper, which is great. They're selling more, they get some sales growth. But then if your buying in of materials has been impacted by a weaker pound and your costs go up, then that in turn has an effect. So
absolutely. And I was talking to on a smaller scale. I was talking to a finance director the other day who his company imports medical supplies. Had a good, smallish business, sort of, 500k EBITDA, something like that. And they've seen, since Brexit, since the currency fluctuations, they've seen that drop by around 90%. So, the impact has been more severe on some companies rather than others. I think as a journalist, it's been, a business journalist at that, it's been a frustrating topic to cover because of the lack of explicit information at the moment. How can a sort of finance leader extract that, do you think?
Well, as I say, I think where we're at with the considerations that have been forthcoming, even though the weakened pound, sort of the currency fluctuation that we've seen has had a very specific, initial impact on companies. But I think where we're going with this is that, from the perspective of whether it's labor or people, and the talent pool and who gets to stay and who doesn't, and how having access to the right talents can impact wages from the regulatory perspective. And we often talk about people-centric versus product-centric companies and where they're going to be impacted. So I guess we'll come on to that.
Sure.
But there are a lot of different. I mean, clearly the impact is not necessarily known to the nth degree, but we believe the areas of consideration to help you model different scenarios and start to get to grips with scenario planning and basically trying to figure out in a sensible, risk mitigated way where you should be focusing. And I think we've talked about companies are, absolutely every company we talk to is talking about sweating the assets and, improving return from their assets and, really trying to figure out how to control capital expenditure. But then the fact remains, but you need to also be thinking about growth. Where are you going to invest and what scenarios do you model to focus that investment in the right way?
Difficult tightrope to walk. Now, there's a lot of talk about sort of agile creative thinking. We've got it up on our bullet points here. It's a term you hear a lot. What is it, and how can your average finance director get hold of it and sort of drive change?
Well, I think the essence of it is around if we are struggling to get the fundamentals right. So certainly we see with a lot of active projects we have on the go and a lot of customers we deal with, there's a lot of complexity in their companies, and the way in which processes are executed across their businesses are not always that consistent or that optimized. So, and there's all kinds of reasons why that's happened. But I think part of this whole exercise is, the sort of concept of getting match fit is figuring out what's important to the business, how can you get a hold of clean, trusted data, how you can actually, and I think, it's a really important point here that as the role of the finance exec changes, they're having to look outside of finance and start to pull in data from different parts of the business around, whether it's people data from HR or operational data or sales and marketing data or even data outside the organization. So the data set's getting bigger. The data set is getting more sort of complex. So the question is, are you looking at the data with the right tools to glean some insight from that? So a lot of this, I think, is about the almost the navigation going forward of the Office of Finance, rather than those traditional kind of backward-looking, reconciling actuals against budget. Historically, we're talking about being more proactive and modeling some of these different business scenarios that we think are going to be really important around regulatory change, trade and tariffs, people movement. So we'll come on to them.
Excellent. Yep, as good a time as any to move on to our second section, the Brexit effect, as it were. We've touched on it, obviously, previously. Now, remember, I do have the iPad, so please, if you have any questions, send them across via the Cover It Live box below your video stream, Brexit or otherwise. So, another stat from the Stepping into the Unknown report. 41% of CFOs admit they did not expect Brexit, and probably more importantly, didn't plan for it. I guess those are the ones who admit it as well.
As we say, the Bank of England is sort of, Mark Carney's kind of in that that group. So in good company, I guess. But now the reality is upon us. So things are moving fast, or some things are moving fast, and clearly, I guess. The change in dynamic in the market that we're seeing is, we were talking earlier about the state at which companies are in, and are companies more vulnerable to M&A, or are companies going to be able to run more efficiently and ensure that even though they're protecting capital and they're trying to batten down the hatches in some regards, where there's change, there's opportunity. It can be a bit scary. And there is a kind of a risk dimension that needs to be managed. But we were talking earlier about the sort of Kraft Heinz $143 billion bid for Unilever. And the question was, Unilever had not performed that great in the preceding 12 months, on the kind of FTSE 100 scale. But also the weakened pound, the sort of the asset value started to look more attractive. And no doubt Warren Buffett and co. from the Kraft Heinz side looked at their due diligence and they thought maybe opportunistically it's worth a go. But so I think that's a very, very top end example of. Yeah,
sure. How is that M&A activity that you've mentioned? How is that likely to affect those in the sort of mid to smaller end?
I think it's the same sort of logic though. So for companies who are perhaps not optimizing their business operations, not driving the the kind of business performance in the way that they could potentially. Is there unrealized value? Are there excessive costs? Are they, the point about currency and the weakened pound is if that effectively makes UK asset values more attractive for non-UK buyers, cash-rich buyers, then so I guess every company's got and there's no blanket sort of perspective on this. Every company is going to be impacted in different ways, as we were saying about people-centric businesses that fight for talent and how they're going to offset wage growth. Potentially if they have a difficulty getting people versus the product-centric. So I guess even though Unilever is kind of a top-end example of where, and it would have been, I think, the second largest, acquisition ever. I think companies right the way through the ranks. Clearly if you're more UK-centric, UK-focused, you buy and source and sell in the UK, then you're not immune to good business performance. But clearly we see the companies that are trading with Europe, and 54% of our exports are going to other EU countries. So I guess the question is, where, and Britain's always been a trading nation, so clearly where there's a lot of import-export, a lot of trade going on, we are exposed to these things, and I guess the companies are going to have to kind of figure out how to ensure that they not only preserve the value, but where they can invest in growth, and they can justify that, and they have a good solid business case, they need to be thinking in that way as well.
So I'm one of these 41% of CFOs who admits that they didn't plan for Brexit. But, I've realised the error of my ways, and I'm looking to change, my company. How do we model change?
Mm-hmm. Well, I think so. As I say, I mean, there's many different nuances to the individual types of companies and what they do. So, large companies, small companies, people-centric. So often we talk about the Brexit effect on London, as a huge market, and it's clearly not just financial services. So you have legal firms, accounting firms, and interestingly, IT and digital, which is a huge growth market, which is dependent on people. And there are some statistics out about 46% of all the new jobs in sort of the digital industries in London were from non-UK pools of talent. So I think for the people-centric industries, we talk a lot about strategic workforce planning. So have you got the right people doing the right things in the right location within your business operation? And if, again, some of the scenario modeling is looking at if there is a change in the nature of the talent pool that you're able to access, in all likelihood, you'll be paying more. And your wage bill is going to go up, which for people-centric companies tends to be their biggest cost. Often that's the thing that sort of drives or determines margin and profitability and whatnot. And I think the other industry areas like product-centric, and this is really whether you make things, you manufacture things, or assemble or buy and sell more in a traditional kind of retail model. For those types of companies, the regulatory policies that exist within the customs union or the EU single market at the moment that allows for a known tariff or duty to be paid once, and then it can move around the EU without it further impacting. So it's against EU rule, as it were, that any single company or country could sort of make changes to that. So when we start looking at landed costs and we start looking at the actual cost of goods and what tariffs and duties we might have to pay, there is a great example around Guinness, who were brewing in Ireland, in Dublin, and within the silver bullets, the actual kind of containers that move newly brewed Guinness up to Belfast for canning or bottling, and then back again to Dublin ports to ship. You started to read through this and it's thinking, well, hang on a second. So those cross-border movements.
Yeah, there's a hard border potentially.
What will happen? I mean, Ireland's a particularly sort of interesting dynamic, but it is representative of the fact that many of the companies that we deal with, mid-sized companies as well, their ability to make something and combine or assemble those products that are being made across boundaries and borders, and then taking a finished product and bringing it to market. These sort of dynamics are now in play for the UK to figure out how we're going to do this. So I was fascinated to see that with the Irish example and Guinness and whatnot, we import quite a bit more to Ireland, we export more to Ireland than China. We've got some £4 billion more to Ireland than China, and that may change over time. But so, our European trading partners and then outside EU, those trade agreements, and we see what's happening in the States and Canada, Mexico with NAFTA and the TPP. So all these kind of global kind of trade and global supply chains are getting more complex and more sensitive.
Yeah, and I mean, you mentioned Guinness there. A lot of food and drink from Ireland gets exported to mainland Europe, and at the moment it's cheapest, I believe, to get the ferry across to, say, Liverpool or somewhere like that, drive it down and then get it across through the Channel Tunnel. With a hard border in play, a lot of those businesses may have to rethink their business models as well.
Indeed. And I think that modelling is something that's kind of close to our hearts in terms of, again, it comes often down to the data and in what state that is, how fragmented it is, do you trust it, is it clean? And then the question is, although everyone likes dashboards and likes the idea of good dashboards, the insight that you glean from that is often based on the quality of the data that's being fed to it. Is it broad enough? So a lot of the scenario modeling we talk about, whether it's strategic workforce planning and looking at the makeup of your labor and your workforce in its broadest sense, or how products are made and brought to market, and all that kind of regulatory tariffs and duties and extra costs and landed costs, etc. How you actually capture that and try to get away from that world of kind of data that's a little bit suspect being pushed into spreadsheets and then being sort of circulated around, we don't think is efficient. So I think a lot of our scenario modeling around how the impact to your supply chain could manifest and what are you going to do about it. And that also ties into the whole kind of procurement network and who are your suppliers, and are they consistent with your brand values from one perspective, but also are you optimizing your supplier base and ensuring that you're not imparting any new risk or introducing any risk in terms of how reliant you become on particular suppliers, in addition to whether you're getting a good deal.
Yeah, certainly smaller businesses, who have one main supply, one main large company could get themselves into a lot of trouble if they decide to pull the plug, as it were. I'd like to talk a little bit for a couple of minutes about the change in the finance leader, the CFO or finance director, depending on the company, and how their role is changing compared to this. You mentioned about this strategic modelling. Businesses, I guess through technology and process, a lot of the sort of underlying things, like expenses that used to be done, data entry, things that were done manually in the past, are becoming automated, freeing up the finance director to become more strategic, as it were. Could you elaborate on that a little bit for us?
Yeah, absolutely. I mean, this is a really fascinating change. I mean, our joint chief exec Safra Katz is often saying, you never have enough talent, enough time, or enough money to sort of really drive your business in the way you want. Everything's under pressure. You have to keep reinventing yourself and keep pushing forward. But she talks about her role heading up the Oracle finance function, and we talk a lot of finance leaders who say that their historic role of being more backward-looking, more kind of reconciling actuals against budget and trying to discern some narrative around that as to what transpired, has fundamentally evolved to be more forward-looking, to be more of a strategic business partner. And part of that is also, it's interesting because the inherent sort of analytical, skills that a lot of finance function people have, the data that they're looking at is growing way beyond pure finance data. So that's the key issue, that there's data from other parts of the business, so having to become a lot more cross-line of business savvy, and then external data, social data, which has an impact on your brand and sort of reputation in the market, a la sort of United Airlines and what happens, and if you get it wrong and the brand, the brand gets damaged or tarnished. So I think fundamentally to your question, Tom, the essence of the modern finance exec is absolutely evolving to be more forward-looking, and what's being asked of them is, can you model outcomes, different business scenarios from a much broader set of data? How do we assimilate that? How do we glean insight from that? What are the golden nuggets? And always with an eye on mitigating risk and so these are all really important things. I think the other sort of fundamental thing we see a lot in the market is, we're an IT vendor, right? So IT is an enabler of change, but clearly how the business itself manages that change from a leadership perspective, how they sponsor a change program. People tend to resist change. It's not in their nature. It's kind of, change is scary. But we're also seeing a lot of the most forward-thinking and effective finance leaders are not only the sort of guardians or helping to navigate and chart the course towards achieving business growth, rather than just looking backwards through the rearview mirror, as it were, on the actuals against budget, etc. So that's quite key. But we're also seeing them stepping up to kind of help evolve the culture of the companies. So we're sort of saying that, and this is true of Oracle and other forward-thinking companies, is a lot of this is about IT is the enabler to help you do those, to help standardize processes, operate more efficiently, but also give you the tools to model different outcomes and different scenarios in the best possible way. And then again, they always talk about sort of data to information to insight to actions. And it's trying to find that flow that you can actually chart the course forward. And the Office of Finance and the evolution of their role puts them right in the centre of that.
Excellent. And before we leave Brexit, I'd like to loop back round a little bit to regulatory change.
Yeah.
Obviously, this is something that is extremely important. I mean, certainly both national and international organisations, governments have been on this drive for sort of greater transparency, cross-border tax, everything like this. Specifically in terms of Brexit, I guess we've got the sort of Great Repeal Bill that signs EU regulations into British law, but I would imagine that fairly soon after Brexit there'll be plenty of scope for tinkering and whatnot, and those who wish to trade with the EU will also have to comply with those regulations as well. So, yeah.
Indeed. I mean, it is fascinating, isn't it? I mean, there's a lot of posturing. There's a lot of, we've got the French elections happening, the UK elections happening. Whether that strengthens the mandate, remains to be seen. But clearly, again, without the crystal ball, we don't know the specifics on tariff changes. We do know how other sort of trade agreements, how long it's taken to create those things. So, the divorce or the divesting exercise in terms of what our ultimate bill is, versus whether we can construct trade agreements in parallel, I guess is part of the big debate right now. But I think that, as I say, a lot of the things we're talking about here are how can each individual company be in a better position using the right tools, leveraging robust tools to model different scenarios and outcomes. You mentioned tax, which again is sort of a fascinating topic because, one of the things, not to sort of bring up Ireland again, but when the EU was asking the Irish government to try to collect back taxes of some 12 billion euros from Apple, suggesting that perhaps the corporate tax rate wasn't sufficient, and this is sort of unprecedented in a way. The OECD is instructing tax authorities to report on tax country by country in a new way. So even HMRC is kind of trying to figure out, how they are going to ensure that the payment of direct taxes, for the most part, are representative of the business that's actually taking place. So I suppose within tax on individuals, tax on corporations, tax on the movement of goods, it's all in play, and we just haven't seen such a state of flux and such a kind of a changeable dynamic right now. And again, this is about companies saying, if my market's growing, great, I want a chunk of that action. If my market's not growing, I'll only grow by out executing my competition, and that means I've got to run a tight ship and look at investment where investment's appropriate, but model the right scenarios.
Excellent. And without knowing it, you've perfectly segued into our first question, which is coming from Philip. When it comes to scenario planning, what is the first step, and how do I get started? So
I think I can answer that in a couple of different ways, I think. I mean, so my fundamental view would be we often, as companies, as individuals, finance people, etc., we undertake scenario planning anyway to an extent. But the question is whether you're looking at a broad enough data set and whether or not the data itself is clean, it's trusted, because the planning against the scenario all kind of assumes that the data is in a fit state and you're looking at enough data points, enough kind of, key performance indicators or things that are going to feed the scenario plan. So I think our fundamental view, and again, as a an IT provider and a vendor, we would like to suggest that from the perspective of how you address this exponential increase in data, structured, unstructured, social data, etc. That's a fundamental element to this. Are you even looking at the right data, and can you trust it? And then the next kind of fundamental thing is the tools that are being used for this type of work, in our view, leading practice or best practice sort of implies that the tool is allowing you to create a degree of collaboration or iteration with the individuals in your business. So, for example, much as we all sort of love spreadsheets in one regard, they're sort of the double-edged sword is they're not necessarily auditable, or who's got the right version, and you email it around, and is the data changing? The Chinese whispers thing as data sort of morphs. And so I think what we talk about for scenario modeling in terms of leading practice would be get your data sorted out, ensure that it is representative of all the things you need to capture, and the tools you use to introspect that data need to allow for that iteration and that collaboration between different stakeholders, but ensuring you're looking at the same info, and you can increment it and evolve it in a sensible way to kind of refine the models, rather than, as I say, well, a lot of companies will look at what might impact their business, again, people-centric, product-centric, but I think that the data is only getting more complex. So I think that, get the data right and make sure the tools are sufficiently robust, and not just expedient.
Fantastic. Thanks for that comprehensive answer, David, and thank you for the question, Philip. If you've got any questions, you can still ask them in the question box below this video if you're on the accounting webpage. Right. That leads us on nicely to the next section, should I say, driving cost efficiency and improving internal processes. Looking at the slide here, here's the stat from the Oracle report. 45% of finance leaders will be updating their technology in favour of more powerful systems. Was there a time frame, do you know, around that? Was that sort of next year or sometime in the future?
I think that the context of this particular report, and we do quite a lot of research around this topic, but the time frame differs, but over the next 2 to 3 years was the sort of implied time frame. So clearly, the war on talent or the fight for talent is key. I think what we often talk about with this sort of subject in mind is around, are they doing the right things, as we've talked about? So, for instance, too much time sort of collecting data rather than, doing the analysis is needs to be looked at. Also, location. Where are people doing things? So sometimes, this point about sweating the assets, we see what are often quite established models of attempting to sweat the assets, consolidate common areas of a business. I mean, take, for example, shared services. Shared services has been around, old as the hills. But the question of saying, well, I want to achieve process standardization, cost reduction, and I want to create some commonality and standardization around a process as it supports a business unit. So that's great, and companies have done a lot of that. We've done a lot of that. But what often stems from this is as the refinement occurs and you start saying, okay, so where's the automation coming in? So those things that might have been handled by humans, starts to lead in this world of sort of, RPA or robotic process automation and AI and these new areas of can we do things in a more programmatic way and a more automated way. So that's one element of kind of the shared service dynamic, which is evolving rapidly. But it's also around sort of the allocation of cost or profit to consuming business units. So a lot of companies we talk to, they're saying, well, we've set up this sort of shared service, but actually we don't necessarily have the tools or the means, and this is covered a little bit in the research paper, about managing profitability and cost in a more structured way, in a more transparent way, and ensuring that you've got a handle on this so that you can actually allocate back out to consuming business units in a shared service model. But generally speaking, it's important, and companies don't always do it that well.
So the first bullet point we've got up here, you mentioned sweating assets there with an eye on growth. I guess in a lot of instances, finding efficiencies or reducing headcount, what have you, versus growing might seem a bit contradictory, but I guess would you say that technology is the sort of magic bullet in there that sort of cuts through that?
I don't like the term magic bullet or the phrase, I mean, it's almost like, the magic bullet, silver bullet, the panacea, whatever. I think the we often talk about brilliant basics. Yeah, I mean, the theory is wonderful, but can you execute on a business strategy and a plan and leveraging IT? And sometimes we talk about this world of digital, and it's such a hyped term, and of course it means different things to different people, and sort of different organizations. But we often talk about the fact that where you're thinking of maybe re-engaging your customers with a new capability, maybe it's a mobile app, or maybe you're, in the context of Unilever, I was reading about Dollar Shave that they paid $1 billion for to kind of create a new model. Or you think about Nestle with Nespresso, it's sort of a straight-to-consumer brand when they've always actually been sort of, having a consumer brand, but always through distribution channels, through retailers, etc. So I think business models are changing all the time. I think that the automation, the technology is never a silver bullet or magic bullet, but it's basically trying to reduce the moving parts. There's a lot of complexity, a lot of organic growth from all types of reasons, and whether it's organic growth or acquisition growth, or it kind of falls in the too hard to deal with bucket. So we say to people, tell us about procure to pay, or tell us about this particular process. Well, we actually have 4 different ways we do that, or how we handle assets, or how we handle. So I think companies have morphed into much more complex entities than they wanted to. What I would say though about technology is, it's things like cloud. It's really important in the sense that you see a lot of hype again around cloud, but we do fundamentally believe that you will save some money by moving from a CapEx to an OpEx model, a rental SaaS, software as a service model. But it's more important than that in the sense that however long it takes you to implement, the real benefit is about creating the opportunity to increase or accelerate your innovation cycles. So allowing you to model the outcomes, test the outcomes, productionize the outcomes if you can, but do a lot more of that a lot more quickly. So I think cloud as an enabler changes the dynamic. Digital, we were talking about in the sense of digital's great, but it's almost like if your back end is broken or there's a lot of fragmented data and processes, can you move straight to the digital bit and realize the benefit and capture the upside of all this great digital stuff, these new customer engagement models, but where your back end is not fundamentally efficient or standardized or too complex, you're unlikely to realize the benefit of the new stuff and the innovation stuff. If you're, so you've got to be holistic about this. You've got to look at the end to end.
So I guess that the uncertainty may be a good thing for a finance leader looking to tie in all these fragmented processes. It gives them an opportunity, gives them a bit of leverage or heft that they can go to the board and say, right, we need to react faster, or speed, make our processes more efficient, what have you, and it gives them a sort of ticket to do that.
Sort of galvanizes them in a bit. And dare I say it, again, having been around a while, right, the year 2K or Y2K dynamic at the time, we didn't know what would transpire from, the clock ticking over to, 2000. And all kinds of doomsday scenarios were sort of, prophesized at the time, much of which didn't materialize. But the thing is, it did sort of galvanize people to say, you know what, we don't even know with certainty whether the systems that we've deployed will handle this specific change. I think it kind of forced leaner thinking, and people thought we really need to review this. So same thing with a credit crunch. Yeah, the financial crisis has resulted in it's kind of survival of the fittest, right? The companies, and I always liked this. There was Andy Grove, the head of Intel. He talked about only the paranoid survive. Which is a bit sort of an interesting metaphor, but it's kind of that mindset of continual innovation. There is no endpoint destination. It's that kind of constant navigation, dealing with all these uncertainties like Brexit, like the fallout from the credit crunch, and trying to effectively understand risk versus reward, and where you can grow, where you put your money, where you put your resources. But again, I think where IT comes in is there's a lot of things that can be leveraged to help you execute your business strategy better.
And in terms of planning, I mean, I think Philip's question there, in terms of the sort of efficiency, scenario planning, what have you. I guess one of the fundamental questions you need to ask yourself right from the beginning is whether you're people or product centric. I think you've touched on that before, which obviously then affects the way that you plan going forwards.
Yeah, absolutely. And you know, we see actually UK manufacturing sort of resurgent. And you know, we're doing some great stuff in this country, and I guess, you know, the quality of British goods and, you know, sort of UK PLC or whatever, you know, so we have a brand, and there's a lot of IP in Britain, and again, a lot of quality manufacturers, and I suppose, again, it's that sort of, what is the impact of the currency going to have on goods bought in? How are cheaper exports going to benefit me in terms of sales growth? So there's all these sort of considerations, all these data points that basically need to kind of be brought to bear. But I think also, you know, this concept of sort of servitization or whatever, you know, has been around for quite a while now, which is sort of saying, well, you know, I make these things, but is there higher margin business potentially associated with wraparound services? And there's some very famous sort of market studies around companies that perhaps built aircraft engines or other things. And then the question becomes, if there was more of a full life cycle service being provided, which kind of leverages the intellectual property as well as just the making of the end product. So I guess, you know, in this Brexit world, you know, who we're selling to, what tariffs, duties, taxes, distribution considerations, you know, where I'm looking to ship and how I'm going to ship, you know, road, rail, air, whatever it is, you know, all of these kind of scenario models are all about efficiency, you know, cost savings, and ensuring that, you know, our business models could be executed in the best possible way, you know, to deliver shareholder growth and to kind of deliver, you know, all the benchmarks and things that we're trying to do. But again, it's not just the business models that we have been doing, it's also where do I invest going forward? You know, what new business models, what new things do I need to be thinking about? Because, you know, we always talk about this, but, you know, if you're not disrupting, somebody's going to be disrupting you. And that's the world we live in right now. I mean, things are just changing that fast. So we have so many different dimensions of change happening. And sort of the backdrop to all this is this conversation about Brexit, you know. So I guess it's kind of getting to grips with this and making sure we can capture some of these data points. We're thinking about the problem creatively, not siloed in a specific functional part of the business, but really looking across the piece.
Brilliant. Thank you for that, David. Just to spin through the last couple of bullet points on the slide there, you know, so are you people or product centric? So if you're product centric, obviously you're looking at how trade agreements, regulations, taxation, all these things affect you, who are your suppliers. If you're people centric, then I guess you mentioned earlier that remarkable statistic about 45% of IT jobs in London being filled by non-UK workers, so there's likely to be a talent war. Do you have the right talent? Are they doing the right things? Are they in the right location? And obviously the overarching theme to all this is how Brexit will affect this. Right, so moving on then, next session, aiding better financial and performance management. So I think you touched on this earlier, looking at sort of better sources of clean and most importantly trusted data, and also not from the finance perspective. Could you elaborate on that for a little for us?
Yeah, it's a common theme. We see it all the time. And again, you have, you know, different parts of you know, an organization. Sometimes can get a bit parochial about the nature of the data that gets generated in their area, and when we look at, say, for instance, HR, or we now call it human capital management as a, you know, as an area, are we recruiting the right talent? Do we nurture that talent? How do we manage their succession through our business over time? But I think, you know, when you're talking about HR, you know, sometimes we find some of our customers are saying, oh, well, that's kind of an HR project. And we're often kind of, having the conversation, which evolves into, but hang on a second. So the organizational structures and the organizational sort of hierarchy and how cost centers are aligned to specific teams is all sort of tied into this area of, the data should very rarely be focused on one specific area. It's almost like the business processes that exist. If you take a standardized kind of quote to cash or opportunity to cash kind of scenario, that actually spans lots of areas. Who are your customers? What are you bidding for? How do you allocate resource or material to the creation of something that generates value in your company? And I guess the point is that all of these things are connected. So from an IT perspective, we've gone through different gyrations over time where we had sort of a best of breed strategy where we could kind of cherry pick specific things to apply to a business functional area, to this broader concept of enterprise resource planning or ERP. And that had a much more kind of homogeneous footprint covering more of your business operations. And then with the introduction of cloud, again, the same sort of logic holds true, that as we move to cloud, most people don't move in their entirety to cloud. Or if they do, it doesn't happen overnight. So we have these hybrid environments where it's some legacy assets supporting one specific part of your business, connected to a myriad of cloud assets, which in turn can generate complexity and issues with data and the synchronization of data. So you're getting accurate views on, those things that feed the business processes and ultimately, drive value in the business.
It's interesting you bring up the sort of non-financial data. A couple of things I've written sort of tie into that quite nicely. We were speaking to an ice cream vendor up in Scotland. They make it down there. I think they sell a bit more ice cream down south. But they look at data. So how much ice cream have we sold, and then obviously for sort of future forecasting, budgeting, planning, what have you. Looking at weather patterns, so if it's a sunny day in July, they'll obviously sell more ice cream. So it's being prepared, getting the raw materials, and just being a bit more efficient that way.
Yeah, I mean, there's a lot of, I think you can't underestimate the power of social data. So whether this is sort of cookie data that rolls up from browsers and you profile someone's path through their favorite football team or where they eat and what they're browsing. So all this data is sort of anonymized, but it creates profiles of buying patterns by postcode and all these kinds of things. But as you say, when you're looking at an ice cream vendor, or we often talk about in the retail context, Michelle Obama's red dress, and all of a sudden it becomes popularized and people are wanting to emulate that or to have access to something similar. And the companies who are actually able to kind of assimilate that social data and take in feeds and listen to a lot of that kind of information, combined with their own supply chain data. Is it nearshore, offshore? How can they improve? And there's a couple of interesting use case or case studies around companies who are actually much more receptive and responsive to social sentiment and market change, and that doesn't change with Brexit. So these things will still be happening. But I guess for the UK companies that have got to figure out their route to market, whether it's domestic or whether it's trading partners, I guess they have to kind of figure out how they're going to assimilate this data and make it actionable.
And onto the action point. We've got on the second bullet point there, better tools to interrogate this data. So you've pulled it in from various disparate sources, taking into account financial and non-financial data. But I guess it's about finding the right tool for your business as well. I mean, there's no point in spending a lot of money on a nice shiny tool if it serves no use for you.
Absolutely, and I think we sort of touched on cloud before, but I mean that kind of fundamental model of kind of renting software, renting the use of that software as part of a software as a service kind of thing. So, Oracle often is sort of associated with only top-end businesses, real high-end enterprise, complexity, expensive. I mean that is not representative of who we are now. our transformation as a business to kind of really be market leaders around cloud. And again, this could be private cloud, hybrid cloud, public cloud. There's lots of sort of sort of delineations or nuances to the nature of clouds. But fundamentally, where we're talking about rental software, SaaS software, the entry point for a lot of those kind of smaller companies who always wanted the best software but couldn't necessarily afford it. So now we see a lot of these companies saying, well, actually, I do have a few different tax jurisdictions, or I do have some complexity around managing data. I do have some complexity around standardizing processes. So I guess from our perspective, we have a huge new addressable market of smaller and mid-sized companies, growth companies, who have kind of said, we want access to the best IT capability and software capability, but we can now afford it. It now becomes viable for us to onboard something more quickly and get all that great IP and functionality and capability and whatnot that Oracle kind of bring to bear. But we're not the only players in town, but we think we have some important sort of differentiating capabilities about the breadth and depth of what we can offer, even though the adoption can be very incremental or tactical versus broad.
Good stuff. I'm aware we've got 10 minutes left, and I'd like to have a bit of time for questions. So the final section that we've got in our presentation, staying ahead of change. If we throw to the slide there, it's the final stat from the report. 53% of finance leaders say their role is more focused on forward planning than ever. Would you say that, speaking to finance leaders on a daily basis you do, is that reflective, David?
Yeah, absolutely. I mean, we sort of touched on this. I mean, I guess it's sort of come up in the conversation a few times. But clearly, the evolution of the role and what's being asked of finance execs, finance function people, is again, not rearview mirror. It's actually being strategic business partner, looking forward. And as I say, I mean, that sort of guardian or steward of sort of, assimilating. We always know that sort of finance people tend to be, the most analytical people in the business because they're used to doing that. They're used to looking at numbers and understanding, am I delivering against, key performance indicators of the business, et cetera. But I think going forward, clearly the role is changing massively, and the role's not getting any easier, that's for sure, because, they're having to step up, assimilate a much broader set of data, try to distill some insight and some outcomes that clearly have been modeled with the tools we were talking about. But I guess managing it in turbulent times or uncertain times is all about what's the new world of a Donald Trump American policy or a Brexit policy, and Britain is formidable. But clearly, with this uncertainty around us, there's a lot of changeable aspects. And, again, we can only try to model and try to anticipate where impact will occur. How do we deal with that? What are the options? Where a risk is apparent, how do we mitigate that risk? And we see that a lot with companies. And, we often talk about finance function as also thinking about, governance, risk, and controls. So tell me about the controls in your business to ensure that we have clean lines of accountability and ownership between different individuals, sort of within the finance function, but also kind of, related. So the finance function is often asked about, tell me about what controls you have in place. How do you, what's the segregation of duties between what people do so that there's transparency and accountability? And whether that's kind of tax related or bringing tax and finance together or within the finance function or whatever. I mean, the role's definitely changing. We're huge advocates and supporters of the evolution of that finance function. We've, gone through a lot of it ourselves. And then going forward, as I say, as a vendor of what we think are, best products on the market, we're wanting people to kind of adopt and assimilate them into their more efficient businesses going forward.
Wonderful, thank you for that, David. I'm going to throw it over to the questions now, and tying in with the point you were just making, actually, we've had one in from James who asks, what are the main barriers preventing Office of Finance from playing more of a leading role in guiding their organisation? And I guess my follow-on would be, how can they overcome them?
I think that's a great question, and I guess when we look at the companies that we're dealing with, and we look at the market at large, and for Oracle, I mean, we're a global company. It's every industry, every geography, and increasingly, as I mentioned, small, medium, and large companies. So different organizational types, different organizational complexity. But I think it's sort of a mindset shift. So the problem is that the changing role of the finance person, if they're shackled to a lot of inefficient back-end systems, which requires the bulk of their time and effort, it's very difficult to be strategic. And it's very difficult to kind of add a lot of value-creating insight to the business if, 4.5 days out of the week, you're firefighting, you're trying to sort of keep the lights on and make sure all that back end. So I think it's almost, and we often talk about this, sometimes the business case surrounding a front office initiative, some new customer-facing thing, drives more revenue, increases basket size, whatever it may be. Those were easier to justify. The problem in finance, for some of the companies, or many of the companies we deal with, they're sort of trying to run twice as fast to stand still in keeping. So it's basically, partnering up, getting the right input, or building the business case, which is not just about finance modernization in and of itself, because clearly it doesn't exist in a vacuum, but it's how finance can create value or add value to the other business areas. And I guess specifically to the question is, that's not going to be the same for every organization, but it's kind of that mindset change, and then creating the business case that allows you to modernize and standardize those things that are very time consuming, but often non-value creating, as we suggested about automation, however you achieve that, to free yourself up. There's only so many hours in the day, there's only so much bandwidth available, but it's about freeing yourself up to even give yourself the space to investigate and to explore and to model those things that really do add value, differentiating things that you can help the business in terms of growth. So again, tough question, and sorry, that's a bit of an elaborate answer, but I think it's kind of, if you get the basics right, you create the space that you can actually become more of a strategic partner. And it depends by organization, but I think the possibility, the potential's there, and we do see it increasingly.
Thank you for that, David, and thank you, James, for that. Here's a real noodle scratcher from Valina. They ask, do you agree that people are still worth more in terms of asset than machines, and should we continue to invest in them rather than replace them? At the end of the day, machines are programmed by people, not the other way around, and it seems like our creativity is put aside and we're being replaced by machines. Interesting,
Who's that from? George Orwell?
Yeah.
I mean, people are always the most important thing, fundamentally. I mean, whatever side of the political fence you're on, I mean, if IT is able to automate the mundane, if IT is able to make more efficient elements of a business, whatever AI, artificial intelligence that exists, it is so far from any kind of consciousness or creativity, really, that humans bring to bear. So my kind of view is that, businesses, and it's regardless of political divide, business doesn't exist just for profit. I mean, it is about the employment of people. It's about an economy and a society that sort of functions, and not to kind of venture into Theresa May, we want it to make work for everyone type thing. But I think it's a fascinating question, because I think the forward-thinking organizations who are looking at innovation are unleashing the creativity of the individuals to allow them to express themselves. And this is where we break down these organizational hierarchies of, the executive washroom or the executive sort of, restaurant and stuff. I mean, it seems to me that the best companies nowadays are much more inclusive. They're much more democratic. To an extent. I mean, clearly there's organizational hierarchy and the reporting lines and accountability. But for the chief execs or the board not to be listening to customers or staff through the ranks. So I think it's about taking away the mundane, automating those things that aren't actually best use of the human brain. If you can do that and create the culture where people are, it's like the virtual suggestion box, you know, going down to the shop floor, talking to people at the front line. And you know, the best run companies seem to be able to get that information and really put it to purpose.
Fantastic. Great question. Thank you, Velina, and great answer, David. We probably could have spent another hour just talking about that, to be perfectly honest, but I'm afraid our time's up for today. David Hobson from Oracle, thank you so much for your time. Thank you also to Oracle for making this session happen. Remember, this session will be available as on demand, so the link will be emailed to you. If you've had any technical issues or tuned in late, then you'll be able to watch the whole thing, rewind, pause, watch it at your leisure. That's about it from us. I hope the session was enjoyable and useful, and we will hope to see you on accountingweb.co.uk very soon. Goodbye.